Hey everyone, welcome to our channel. Today's topic is something that's been buzzing a lot lately in the investment community, the most popular dividend ETFs of 2023. Now, if you're someone who's always on the lookout for smart investment moves, or maybe you're new to this and just trying to figure out how to get some steady income flowing in from your investments, you're definitely in the right place. The dividend ETFs have become a go-to for investors who want a mix of stability and growth. This year, especially, we've seen some standout ETFs that have caught the eye of beginners and pros alike. And let's face it, who doesn't like the sound of earning money while you sleep? So in this video, we're going to bring you the real deal about dividend ETFs. We'll look at which ones are making a splash, what makes them tick, and why they might be a good fit or not for your portfolio. So settle in and let's get started on this journey together. Trust me, you won't want to miss this. What are dividend ETFs? All right, let's jump into the world of dividend ETFs. An exchange-traded fund, or ETF for short, focuses on stocks known for handing out dividends. Now, dividends are like little thank you notes from companies to their shareholders, usually in the form of cash or additional stock. So why are dividend ETFs a big deal in 2023? Well, it's a mix of stability and potential growth. With the economic roller coaster we've been on, investors are looking for something that feels a bit more secure. Dividend ETFs offer that. You get a slice of several dividend-paying companies, spreading out your risk while still tapping into the potential for steady income. Now let's talk types. Not all dividend ETFs are created equal. There are high-yield ETFs that focus on stocks paying higher dividends. Sounds great, right? But remember, higher yield sometimes means higher risk. Then there's the dividend growth ETFs, which include companies with a history of increasing their dividends. It's like betting on a runner who's been steadily speeding up instead of the one who just sprinted off the block. Here's where it gets interesting. In 2023, we've seen some fascinating trends in dividend ETFs. For instance, tech companies, traditionally not the biggest dividend payers, have started to show up more in these ETFs. It's like the tech world finally got the memo that dividends are cool. Dividend ETFs in 2023 are like a wise investment friend. They may not be the flashiest, but they can be reliable and rewarding. And in today's world, that's something to really value. So what do you think about dividend ETFs? Are they the missing piece in your investment puzzle? Let us know in the comments. Top dividend ETFs of 2023. Okay, now it's time to dive deep into the top dividend ETFs of 2023. This isn't just some list we've thrown together. We're talking about a carefully researched lineup. Let's talk about some specific ETFs making waves this year. Vanguard High Dividend Yield ETF, VIM. First on our list is the Vanguard High Dividend Yield ETF. It's like the reliable workhorse of dividend ETFs, consistently delivering solid returns. VIM targets high-yielding dividend stocks and is known for its diversified portfolio, including consumer goods, energy, and healthcare sectors. This ETF is a favorite for those looking for a balance of yield and stability. Ishares Select Dividend ETF, DVY. Next up is the Ishares Select Dividend ETF. Think of DVY as the selective diner, choosing only the finest stocks that have a consistent record of dividend growth. This ETF focuses on companies with a strong 5-year dividend growth record, making it a great option for those looking for growth potential in their dividend income. SPDR S&P Dividend ETF, SDY. Another top player is the SPDR S&P Dividend ETF. What sets SDY apart is its focus on companies that have increased their dividends for at least 20 consecutive years. It's like betting on a long-distance runner who's proven they can go the distance. This ETF offers a blend of yield and quality, making it an attractive choice for conservative investors. Schwab U.S. Dividend Equity ETF, SCHD. Let's talk about the Schwab U.S. Dividend Equity ETF. SCHD is known for its low expense ratio, which is a big plus. It targets stocks based on factors like dividend yield, payout ratio, and size. This ETF is a solid choice for those who want to maximize their income while keeping costs low. Global X Super Dividend ETF, SDIV. For those looking to go global, the Global X Super Dividend ETF is an interesting choice. SDIV invests in some of the highest dividend-paying stocks worldwide, offering a taste of global income opportunities. It's a bit more adventurous, as it includes emerging markets, but can add a nice international flavor to your portfolio. ProShares S&P 500 Dividend Aristocrat ETF, NOBL. NOBL focuses on S&P 500 companies that have increased dividends for at least 25 consecutive years. These are the aristocrats of the dividend world, stable, reliable, and proven. Noble is a go-to for those who value consistency and quality in their dividend investments. WisdomTree U.S. Quality Dividend Growth, ETF, DGRW. DGRW takes a slightly different approach, focusing on dividend growth rather than just yield. This ETF targets companies with good growth prospects and solid financial health, which could lead to increasing dividends over time. It's a forward-looking choice, great for those thinking long-term. JP Morgan Equity Premium Income ETF, JEPI. JEPI is an interesting mix, offering dividend income combined with an options strategy. It aims to provide high income with lower volatility, a combination that's pretty appealing in uncertain markets. JEPI might be a good fit if you're looking for income, but are cautious about market fluctuations. Utilities Select Sector SPDR Fund, XLU. XLU is a sector-specific ETF, focusing on utilities, a sector known for stable and consistent dividends. This ETF is a good choice for those looking for lower-risk income options. Utilities tend to be less volatile, making XLU a potential safe haven in turbulent markets. Real Estate Select Sector SPDR Fund, XLRE. Lastly, XLRE offers exposure to the real estate sector, another area traditionally known for solid dividends. This ETF is a way to diversify into real estate without buying property directly. It's a good option if you're looking to expand your income sources. 2023 has presented a diverse range of dividend ETFs, each with its unique strengths. Whether you're looking for high yield, growth potential, global exposure, or sector-specific options, there's an ETF out there for you. Remember, the key is to align these ETFs with your investment goals and risk tolerance. So, which of these top dividend ETFs aligns best with your portfolio strategy? Let us know in the comments below. And if you find this video informative, don't hesitate to hit that thumbs up button. How to choose the right dividend ETF. All right, now that we've seen some of the top dividend ETFs of 2023, let's talk about how you can pick the right one for your portfolio. It's like choosing a new phone. You need one that fits your needs and budget, not just the one with the flashiest features. Let's break down the key factors to consider. First up, expense ratios. This is the annual fee you pay for owning the ETF, and it's a crucial factor. Think of it like a subscription fee for a streaming service. You want the best content for the lowest price. A lower expense ratio means more of your investment goes towards actual growth, not just fees. In 2023, with all the economic shifts, being cost efficient is more important than ever. Next, let's talk dividend history. We're not just looking for ETFs that pay high dividends now. We want those with a track record of consistent dividend payments. It's like dating. You want someone reliable, not just a one-time charmer. Look for ETFs with a history of stable or increasing dividends. This indicates financial health and a commitment to shareholders. Now, on to fund stability. In the world of investments, stability is a big deal. You want an ETF that can weather market ups and downs. Look at the fund's performance over several years, not just the recent past. It's like checking the weather forecast before a hike. You want to be prepared for all conditions. In 2023, sustainability is also a hot topic. More investors are looking at how ETFs factor in environmental, social, and governance or ESG criteria. Investing sustainably is like eating healthy. It's good for you and the planet. Lastly, consider diversification. A well-diversified ETF can help reduce risk. It's like not putting all your eggs in one basket. Look for ETFs that spread their investments across various sectors and regions. Risks and considerations to watch out for. Now, let's shift gears a bit and talk about something super important. The risks and considerations when investing in dividend ETFs. Just like you wouldn't go hiking without checking the trail conditions, you shouldn't invest without understanding the potential downsides. Let's unpack this. First off, market risk. Remember, even the best-looking ETFs are subject to market fluctuations. It's like sailing. Sometimes you're in smooth waters, other times you hit a storm. The market can be unpredictable, and in 2023, with all its economic twists and turns, this is more true than ever. Your ETF's value can go up and down based on market conditions, and that's something you need to be prepared for. Next, interest rate risk. This is a biggie. When interest rates rise, dividend stock prices can fall. Why? Because investors might ditch stocks for safer bonds. It's like when your local coffee shop hikes prices. Suddenly, that home-brewed coffee seems more appealing. Also, let's not forget about concentration risk. Some dividend ETFs might be heavily invested in specific sectors or companies. If that sector or company hits a rough patch, your ETF could take a hit too. It's like only eating pizza, delicious, but not great for your health if it's all you're eating. Another consideration is the dividend trap. Sometimes a high yield can be a red flag, not a green light. If a company's payout ratio is too high, it might not be sustainable. It's like a car with fantastic mileage, but a tiny gas tank. It won't get you far. And lastly, inflation risk. Inflation can eat into your dividend returns, reducing your real income. Think of it as a stealthy tax on your earnings. So, how do you mitigate these risks? Diversification is key. Don't put all your eggs in one basket. Also, stay informed and monitor your investments regularly. Investing isn't a set it and forget it game. Be proactive, not reactive. So, which of these ETFs caught your eye? Are you leaning towards the reliability of the Vanguard High Dividend Yield ETF or intrigued by the global reach of the Global X Super Dividend ETF? Let us know in the comments below. Your insights and choices could inspire fellow investors. If you found this video helpful, please hit the like button and subscribe for more updates and insights into the financial world. Your engagement helps us grow and continue providing valuable content. Until next time, keep investing smart and stay informed.